Welcome back to Investing Talk Podcast. Actually, today we're kicking off something a bit different, a dedicated deep dive. Here at the Deep Dive, our whole mission is really to cut through all the noise, to distill complex info and just give you clear, concise insights. And today, we're tackling a really specific question, one that came directly from one of you, and it feels very timely. Is SuperMicro Computer a good time to buy now? So, we're going to try and unpack all the complexities around SuperMicro Computer as an investment. We've looked at various analyses, and the goal is to give you a really clear understanding of both the potential upsides and, importantly, the risks involved. And hey, if you find this valuable, if this helps you out, please think about subscribing, maybe giving us a like or leaving a comment. We love hearing from you. And if you're feeling extra generous, you could even buy us a coffee. It genuinely helps us keep putting these deep dives together. Okay, so let's start with the positive story, right? What's made SuperMicro Computer such a standout? Their market position and that incredible growth.
Oh, it's impossible to ignore. I mean, the key thing you see right away is just extraordinary revenue growth. For fiscal 2024, their revenue just exploded, up 110.5%. That's $14.99 billion. Compare that to $7.12 billion the year before in 2023.
Wow, that's huge.
It really is. And it's not just, random expansion. It clearly shows how dominant they've become, especially in the AI server space. If you look at their core business server and storage systems, that's like 97% of their total revenue. And even that grew 19% year over year in the third quarter of 2025.
Okay, that top line growth is definitely impressive. But, sales are one thing. How's the profitability looking? Is it sustainable?
Well, the profitability metrics actually look pretty solid on the surface anyway. They reported a net margin of 7.7% and an operating margin of 8.1% for 2024. And earnings per share, that saw a really substantial jump too, from $1.14 in 2023 up to $2.91 in 2024. So it does show they can turn that revenue into profit.
Right. And what about the company's financial health? The balance sheet, does it support this growth story, or are there maybe cracks appearing there?
It looks relatively strong, generally speaking. They've got $1.67 billion in cash. Their current ratio is 3.81, which usually indicates pretty good short-term liquidity. Total debt is around $2.17 billion, which gives them a debt-to-equity ratio of 0.40. That's generally seen as manageable. So yeah, on paper, the balance sheet seems okay, capable of supporting things.
Okay. And beyond just the financials, there's the tech side, right? SuperMicro Computer is known for being on the cutting edge, especially with things like direct liquid cooling. And they've got these strategic partnerships, like the one with Ericsson for Edge AI. How does that tech edge play into the bigger market picture, especially with AI expanding so fast?
That's a really important point. Their leadership in direct liquid cooling, it's a significant advantage because the whole AI market, it's projected to grow, about 8% compound annual growth rate through 2030? And SuperMicro Computer's cooling tech, it positions them incredibly well for these next-gen data centers. AI workloads just generate so much heat. Efficient cooling is becoming absolutely critical. And they've set some really ambitious targets themselves. They're aiming for $22.12 billion in revenue for 2025 and $30.2 billion for 2026.
Wow.
Yeah, it shows they're pretty confident they can grab a big piece of that growing market.
Okay, that definitely paints a compelling picture, a strong growth narrative. But as always, there's usually another side to the story, isn't there? Let's peel back that next layer. Let's talk about maybe the less favorable stuff, the shadow side, if you will. Despite all that growth, there seem to be some pretty significant red flags popping up.
There are, and this really brings up questions about how stable those financials truly are underneath. I think the most significant development really is the ongoing investigations. Both the Department of Justice, the DOJ, and the SEC are looking into potential accounting violations at SuperMicro Computer.
Oof. DOJ and SEC. That's serious for any company.
It's very serious. And adding to that concern, Ernst & Young, who were their auditors, they actually resigned back in October 2024.
An auditor resigning. That always catches my eye. That sounds like a major red flag. Why did EY leave, and what did they actually say?
It is a major red flag. It's highly unusual and, frankly, quite alarming. EY's statement was incredibly blunt. They said they could no longer rely on management's and the audit committee's representations.
Wow.
And that they were, quote, unwilling to be associated with the financial statements prepared by management? I mean, that's not just strong wording. That's basically an auditor saying, we don't trust the numbers you're giving us.
Yeah, that's about as bad as it gets from an auditor.
It really is. It's the ultimate vote of no confidence. It just casts this huge cloud of uncertainty over their entire financial reporting. Now, a special committee investigation they did later concluded no misconduct was found, but, well, Having your auditor resign like that with those words, it makes it incredibly difficult for anyone to fully trust the reported numbers until everything is completely cleared up.
Right, that doubt lingers. And it seems like these accounting worries aren't the only financial issue. I've seen reports about severe cash flow problems too. What's happening there?
That's another critical point, a real financial weakness we need to look at. Despite reporting those profits we mentioned, SuperMicro Computer's operating cash flow actually turned dramatically negative in 2024. It plummeted.
Bad.
It went down to negative $2.486 billion. Just compare that to the year before, 2023, when it was positive $663.6 million.
Whoa, that's a massive swing.
It is. And it means their cash conversion ratio is negative 2.16. Basically, the company is burning through cash, even while reporting strong revenue and profits on paper.
Burning cash despite being profitable. That sounds odd. How does that work? And what does it mean?
Yeah, it seems counterintuitive, right? But it mainly comes down to huge increases in their working capital. They had this massive inventory buildup, about $2.9 billion worth. And receivables, money owed to them by customers, jumped by $1.6 billion.
Okay, so they're making stuff, but maybe not selling it fast enough or not getting paid quickly.
Exactly. It's a critical red flag because it means they're funding their growth by essentially consuming capital. And that just can't go on forever. It's like, imagine a restaurant that's super busy, selling loads of food, but they're buying way too many ingredients they don't use, and half their customers haven't paid their bills yet. They look busy, but they're running out of cash.
Got it. So that forces their hand.
Right. It forces them to raise more money, like that $2 billion in convertible notes they just announced. Or they might even have to issue more stock, which dilutes existing shareholders. It points to a deeper fundamental issue with actually turning those sales into real, usable cash for the business.
Yes. And it looks like even management is starting to acknowledge some of these headwinds, right? Didn't they recently lower their guidance?
They did, yes. Management revised their fiscal 2025 revenue guidance downward. They initially guided for $23.5 to $25.6 billion, but they lowered that to a new range of $21.8 to $22.6 billion.
And the reason?
They cited customer delays, specifically around AI platform transition. So customers pushing out orders and all this, the investigations, the cash flow, the guidance cut. It's led Wall Street to be pretty cautious. The consensus rating is basically a hold, and the average price target is around $45.63. That implies very little upside from where the stock is trading right now.
Okay, so putting it all together.
Yeah.
What does this mean for the stock's valuation? You've got this incredible growth story in a hot sector, AI servers, but then you have these really serious red flags. How do you even value a company like this right now?
It makes for a very, very complex valuation picture. It's tricky. If you look at the price to earnings, the PE ratio, it's around 25.33. That looks moderately expensive compared to the industry average, which is closer to 18.83.
Okay.
But then if you switch over to the price to sales ratio, the PS, that's 1.86. And that actually suggests it might be relatively undervalued compared to the industry average of 3.15.
So different metrics telling different stories.
Exactly. Which can be really confusing for investors trying to figure out if it's cheap or expensive.
And I've also seen some independent analyses suggesting it might actually be, well, significantly overvalued. Is there anything to that?
That's a valid perspective, too. Some independent discounted cash flow, or DCF, models do suggest significant overvaluation. One analysis I saw put the fair value down at around $18.84. Compare that to the current price, around $46.61.
Wow, that implies it's what, over 50% overvalued?
According to that specific model, yes, about 54% overvalued. And that kind of substantial discount really reflects these ongoing worries about, can they sustain their cash generation? What are the future growth prospects, really, given this cash burn situation?
And just looking at the stock chart, the actual price movement, SuperMicro Computer has been on a wild ride. It's trading around $46.61 now. That's down, 51.6% from its 52-week high of nearly $96.33? But it's still up an incredible 170% from its 52-week low of $17.25. That just screams volatility.
Oh, extreme volatility is definitely the name of the game here. The annualized volatility over the past year, 114.5%. Even over the last 30 days, it's still nearly 90%.
That's huge.
It is. And that kind of massive price swing, it's a direct reflection of all this uncertainty, right? Uncertainty about regulatory stuff, uncertainty about the core business fundamentals. And yeah, despite some recent gains like 12% over the last month, 34% over 3 months. The stock is still down almost 44% year over year. Technically speaking, you're looking at support around $27.60 and resistance up near $47.80. And right now, it's trading pretty close to that resistance level.
Okay, so it's a really complex, volatile situation. Let's look ahead then. What could actually change this narrative? Are there any upcoming catalysts or maybe further risks that could really reshape the picture for SuperMicro Computer?
There are definitely a few things on the horizon to watch, near-term catalysts, I'd say. First, their Q4 2025 earnings report, which should be out around August 2025. That's going to be absolutely critical.
Yeah.
Investors will be laser-focused on any sign of improvement in cash flow and whether they're getting that inventory situation under control.
Right, proof points needed there.
Yeah, definitely. Then there's the resolution of those regulatory investigations, the DOJ and SEC probes, the timeline on that. Completely uncertain. But, if they get a clean bill of health, that would be a massive de-risking event. And then there's the transition to NVIDIA's next-gen AI chip, the Blackwell GPU. That's both a huge opportunity, could drive massive revenue, but also a risk, right? If the transition is messy or delayed, it could hurt them.
So it's not just about what SuperMicro does internally, but also the market dynamics and the competition. What does that landscape look like? Are others catching up?
Oh, yeah. The competitive landscape is heating up. It's intense. While SuperMicro has built a strong position, you've got giants like Dell and HPE making serious inroads and gaining market share in AI servers. So it's definitely not an open field for them.
Okay.
And beyond direct competitors, there are other operational risks, too. Things like customer concentration, relying heavily on a few very large clients, like the big cloud providers or AI companies. If one of them changes plans, it hurts.
Right. Supplier risk, too.
Yeah, big time. They're heavily dependent on GPU suppliers, especially NVIDIA. Any supply chain hiccups or pricing pressure there directly impacts them. And finally, you just have to remember that server markets, historically, they're cyclical. There are ups and downs. We're in a big upcycle now with AI, but that might not last forever.
Okay, so wrapping this all up, we've looked at the strong growth, the cutting-edge tech, but also the serious regulatory issues, the cash flow problems, the valuation questions, the volatility, the competition. What does this all mean for you, the listener, thinking about your investment decisions? How should someone approach SuperMicro Computer right now, given everything we've discussed?
Well, based on all this analysis, our assessment gives SuperMicro Computer a pretty low rating, actually, a 3 out of 10. And the overall recommendation is basically avoid for most investors.
Oh, avoid. Okay.
Yeah. The combination of these severe regulatory risks, the really concerning deterioration in cash flows, and the intensifying competition, it just seems to outweigh the positives of their market position right now.
So definitely not something for your typical long-term, maybe lower-risk investor.
That's right. I'd say it's generally unsuitable for most long-term investors purely because of the ongoing investigations and those fundamental cash flow challenges. We just don't know how or when those will resolve. It's really only appropriate potentially for highly risk-tolerant investors, someone who has really deep conviction in the whole AI infrastructure boom and is comfortable navigating a very high degree of uncertainty and potential volatility.
Okay. But let's say someone is in that highly risk-tolerant category and they still want exposure, despite everything we've said. Are there any maybe guidelines or levels they should keep in mind for managing that risk?
Okay, well, for those who are very risk-tolerant and still considering it, and I emphasize considering, we can outline some potential risk management thoughts. For a conservative entry point, you might look towards that major support level, maybe the $27 and $67.60 range. A more moderate entry might be somewhere between, say, $35 and $42, which is still a pretty decent discount from where it is now. An aggressive entry, honestly, given the risk profile, we wouldn't really recommend that right now.
And stop losses.
Crucial here. A conservative stop might be placed around $24.84, maybe 10% below that key support. A moderate stop could be around $39.62, maybe 15% below the current price. As for taking profits, if things go well, short term, you might target that resistance level near $47.80. Medium term, perhaps $55, but that would almost certainly require positive news on the regulatory front. And long term, you could maybe hope for $70, but that would absolutely need fundamental improvement, clear resolution of the investigations, and a sustained turnaround in cash flow. Big ifs. So just to sum it all up, look, SuperMicro Computer is definitely in an exciting high-growth market. They have strong tech, no doubt about that. But the combination of the regulatory uncertainty, the serious accounting concerns raised by their own auditor resigning, and that really sharp deterioration in cash flow, it just creates what looks like an unacceptable risk-reward profile for most people right now. The stock is likely to stay incredibly volatile until these big issues get resolved one way or another. For now, the downside risks just seem to substantially outweigh the potential upside. Our suggestion, if you want exposure to AI infrastructure, maybe look at companies with, let's say, cleaner governance profiles and proven stronger cash generation. There might be safer ways to play the theme.
What's really fascinating about this whole situation is seeing a company right at the forefront of a massive boom like AI infrastructure, but simultaneously being weighed down by such fundamental and, frankly, quite concerning issues. It really makes you pause and think about how many layers you need to peel back when looking at an investment, right? So much more than just those headline growth numbers. Well, thank you for joining us on this deep dive into the complexities of SuperMicro computer. We hope this has given you a clearer, more nuanced picture to help with your own thinking. Keep exploring, keep asking questions, and we'll catch you on the next deep dive.